Good afternoon, ladies and gentlemen. Let's gather for the last session of the FinTech Summit. Hope you enjoyed yesterday's and this morning's sessions. Don't worry, this session will be as enriching as the one before, so get ready because financial inclusion is a very topical issue. I am Nancy Thomas, and I'm the director of IMS Luxembourg. IMS means Inspiring More Sustainability, and we are a non-profit organization working with companies here in Luxembourg. We are a network of 180 companies, and we are active on the three pillars of the sustainable development. So we are active with working groups on the planet, on the people, and on the profit pillar. The focus of this afternoon will be on fintech to favor financial inclusion, and we will more precisely see if digital is an opportunity or a threat for financial inclusion. To do so, we will take a look at the underbanked and underserved population and regions, and we will share the expertise of very high-level guest speakers joining physically and remotely. Our first speaker is Mghendi-Fisher, founder and chair to the executive board of European Women Payments Network and African Women in Fintech and Payments. She is a fintech and payments thought leader and a social entrepreneur. She fights for diversity and inclusion. In addition, she is a philanthropist with years of experience in cards, payments, the financial industry, NGOs, and social entrepreneurship. She is with us today to highlight can fintech make the world more inclusive, exploring opportunities and challenges. Please, Marta, the audience is yours. Thank you.
Thank you. Thank you for the invite. Good afternoon. Majority of people have already left, so it's really nice to talk to a small audience of people. I'll try not to bore you with a lot of information that we've already talked about during the day. If you've been here, probably you're fatigued by financial inclusion, digital banking, and whatnot. So I'll try to skip on that parts. I'm Martha Mghendi. I'm the founder of EWPN. EWPN is a community of women working in fintech and payments. What we do is we champion for diversity and inclusion. And we work with banks, organizations, individuals to sort of promote and make organizations understand why it's important to be diverse and inclusive. So in a nutshell, because this afternoon we are focusing on how fintechs can foster or can help drive financial inclusion. What it means is individuals and businesses have access to useful and affordable financial products which are delivered responsibly and in a sustainable way. But the other thing that people think that financial inclusion only talks about transaction account. That's not the case. Transaction account is the start of it. It's the gateway. Once you have an account, transaction account or bank account, then you can get access to other products and services. And if you follow the research and publication that has been done, we all know that there's a huge number of adults worldwide who have no access to bank accounts, 1.7 billion adults worldwide. And without access to a bank account or to a transaction account, they are not able to get access to other financial services products as well. So they can't secure loans, they can't build credit and whatnot. The World Bank Group committed to enabling 1 billion unbanked population by 2020. Now, the figures have not been updated, so I can't confirm or disconfirm the number. If we look at some of the representation of the data that we have from 2017, you will see by the regions like Asia has the largest percentage of unbanked population, followed by Africa, Latin America, and then others. If we come close to home, in Europe, you can see Luxembourg, where we're here today, is actually leading. 85.25% with a banking population of 0.252 million. Romania lags behind. Estonia is in the middle. What is interesting is Malta with a population of only 0.49 it has the least banked people of 0.6, but a higher rate of 78.77, right? So this also shows you that financial or the unbanked are not just in emerging markets, it's also in European countries, right? So you can find there's a lot of data and statistics that you can find in different sources, right? So these people are effectively excluded when we go back to those. They are not banked. And a majority or half of these unbanked people are women. There is a potential for fintech to really help bridge this gap, right? And if we do, and if everybody becomes financially included, we have more jobs, the GDP of countries will be boosted as well, we have more jobs, and a whole bunch of other good things that come advantages to that. So when it comes to fintech, many people think it's only payments, because there's a lot of talk when it comes to payments. A lot of funding is going into payments as well, fintechs that are payments focused. But there's other aspects that we think should also be looked into that can further accelerate financial inclusion. So getting access to other services, financial services, other than just paying. So robo-advising, biometrics, blockchain insurance, small, medium businesses, which are some of those that don't have access to credit as well. But this is stuff that you already know. We appreciate that fintech has really accelerated financial inclusion, right? So we all know about the ease of access, the flexibility, speed of use, lower cost associated. We can also look at the bad side, which is operational resilience, talent, data protection and data privacy. And then also we are creating digitally excluded people, especially the vulnerable and the elderly and the misplaced people. The bad thing, or the ugly, is what we've seen when it comes to unethical innovation and financial problems with the vulnerable and the youth. Buy now, pay later, for example, has really put a lot of young people into debt. We see a lot of young people filing for bankruptcy at really alarming rates. So this is some of the stuff that we have as an industry to address and look into and really see what is it can we do to ensure that there's more education, especially young people understand when they buy now, pay later, what it means to them. And then we have, of course, unethical lending. Money laundering is also, speared when it comes to fintechs as well, human trafficking. So this is some of the stuff that is not so good that the industry needs to address. But my interest is more of on opportunities, right? So mobile data, I believe, is the key to financial inclusion, because out of the 1.7 billion unbanked people, 1.1 of those people own a mobile phone. And in developing economies, that's 79% of adults. That means mobile phone with the cheapest or the simplest technology can enhance financial inclusion. Big tech, or techfin, as we call them as well, they have non-financial transactional data that they can use to sort of understand the needs of their users to help them get more access to financial services. Artificial intelligence, of course, for collecting materials. And the interesting one is also social media, right? The 1.7 billion people are unbanked. 4.14 billion people use social media. So there are more social media users than there are bank accounts. So there is an opportunity here, because a lot of people can access social media via internet, via their mobile phone. They don't have to have any digital identification or anything. It's much easier for people to have social media accounts than to have transaction accounts. The other aspect where there presents a huge opportunity is Islamic Fintech, right? You have to understand the largest population of the unbanked community come from the Islamic countries, with China, India, and Indonesia harboring the largest population of the unbanked people. However, Islamic fintech is not something new. It's been there for many, many years. It's only now people are starting to understand how can we also include people, the unbanked population in Islamic countries, and it's becoming part of the mainstream. Islamic fintech accounted for 49 billion, 0.7% of global fintech transactions. So that's a reasonable large amount of number. And I've already mentioned 50% of the unbanked are in Muslim populated countries. The opportunity of what fintech can do is focusing on Islamic fintech when it comes to obligatory charity, voluntary charity, and endowments. This is an opportunity that fintechs have not started exploring, but it can be used to speed up inclusion and also for fintechs that are coming up in this region. So I think for those who are interested in starting up, Islamic fintech is one of the sectors that you need to look into as well. Women consumers, which is one of my favorite. It's a trillion billion untapped opportunity because women are more than 50% of the world population. Women SMEs own a third of world businesses. Yet getting access, I can tell you myself, as a founder, getting access to credit is one of the many impossible tasks. So this is also a very, very good opportunity for companies. And what we've seen is we women are starting our own companies, fintech companies, based on our pains and our experiences. And we are challenging the status quo and creating fintechs that meet our needs and are in our own terms. But again, there's an opportunity for both incumbents and upcoming fintechs to really look into women SMEs and women consumers. The other one is faith-based fintech, faith in fintech, churches, which is very, not many people think about it, but religion is a big thing, right? And during COVID, people still had to practice, those who believed. For example, Church of England made contactless and virtual terminal. They don't accept cash. It's something that many people don't know, but a lot of religious organizations turn to digital solutions because they needed to still receive tithe, donations, and they needed to function. So a lot of fintechs that are smart have already started looking into this, but most of them are focusing on tithing, which is the money that people give when they go. Not so many fintech are looking into e-commerce sites for merchandise. Not many people are looking into retirement funds for the clergy. They have to retire. They have to get pensions. And then insurance for the clergy as well. So there's a huge opportunity, but very few fintechs have been able to tap into this. As an example, you can look at Catholic Investment Services. The Aquinas Fund. They are some of the very interesting that have been able to tap into this as well. So we can all agree that fintechs can accelerate or can help bridge the gap of financial inclusion. To do that, moving forward, we need a strategic framework. We need enabling policies, so governments and regulators. We also need to solve the issue of identification because everything starts with ID. Without identification, you can't get access to financial services. So what does it mean to identify somebody? Solutions in Middle East will not work in Africa, will not work in Europe. So we have to segment and look down at what it means to identify somebody based on the needs of the consumers. Meet the consumers where they are instead of them expecting them to come to us. And the last thing is the promotion of account opening and access to electronic provision for government services. We've seen a very high increase, especially during COVID, for government-to-people payments. A lot of governments needed to disburse funds to support the people, businesses, and individuals. So they relied on fintechs to do this. That's also something that will help narrow down the headaches for a lot of governments. And interesting, and the last one is digital financial markets. And I'll give you a good example. Emakiba, that's the world first mobile-only government bond. That's in Kenya. And it allows public participation in the governmental bond. It lowered the amount, the rate, and it encouraged public participation. So there's a lot of many things that need to be done. But in a nutshell, fintech is allowing. What we need to do is move forward with being more transparent, simplifying the products and design that we're offering to our consumers, and telling and educating the consumers to understand what the products are doing, the fees associated, the risk, and protecting the data of the consumer. And that's it. Thank you very much. Thank you.
Thank you, Marta. I think it was a good intervention, and you show to us how diversity is key and how strategical it can be in companies. To follow on the financial inclusion subject, we will now welcome our next guest, who is Gayatri Murthy, financial sector specialist at CGAP, hosted and administrated by the World Bank. She has spent a decade researching and consulting on what low-income people want and how digital technologies can help fill the gaps to financial inclusion. In this frame, we have the pleasure to digitally welcome her to present financial infrastructure and inclusive markets for low-income communities. We are connecting to her right now. Hello, Gayatri. Can you hear
Hi.
us? Hello.
Yes.
So the floor is yours.
Hi, everyone. I cannot see any of you, but I hope you've had a good conference. My name is Gayatri Murthy. I work at CGAP, and CGAP is a think tank, as Nancy mentioned. We're housed in the World Bank, and we focus on financial inclusion, which is, I believe, a topic you've heard a lot about in the conference. So I won't spend too much time on explaining it, just to say that our goal is not just to ensure that people get access to accounts and use them, use those financial services, but also about how those financial services can connect to the things that they most need to do, which is earn a livelihood, get access to services, protect themselves against shocks. So today I'm just going to take the conversation forward from what you've heard in the last presentation from Marta, and just add a little bit around how those financial services then link into people's lives, and what does it mean to build them after the pandemic and what we've seen. So let me start. First of all, the pandemic it's not news to any of us, but that the pandemic has disproportionately affected low-income people. This seems obvious, but I just want to share with you the scale of what has happened, because that is important. In the years leading up to the pandemic, in the 20 years leading up to the pandemic, what was really remarkable was that the world poverty fell by 1 billion people. 1 billion people were able to lift themselves out of low-income conditions. And that is a statistic that has been very deeply affected by this pandemic. Nearly 100 million of those have fallen back into extreme poverty. So we've actually not only faced a shock, but we've actually reversed the gains that were being made in the time leading up to the pandemic. So the conversation in the world has been largely around health shocks, which is the important area of focus. But I think in time to come, we have so much to understand about the livelihoods that have been lost. And in that, I think there are a couple of segments of the population that deserve special attention. The first is women. Women disproportionately have lost their jobs more than men in the pandemic, according to studies that have been conducted in US and India. But I think this is true globally. And once those jobs are lost, it's been harder for women to get back to the workplace. And not just when they are in jobs, but also when they run small businesses. Women are more likely to close a business, have been more likely to close a business than men. And this is something that I think deserves our attention to understand what's happening here. on the one hand, women disproportionately work in sectors that are affected by the pandemic. So frontline work around going into people's homes, things like that, that are more likely to be lost in the pandemic. But also, when it comes to household dynamics, women have have an inferior position in the household. So they have more responsibilities for caregiving, but also when it comes to prioritizing and protecting incomes, women, the social norms prevent women from putting their work first, and they're often the ones that have to make compromises. So this is an important reality that we already knew, but has been really exaggerated in the pandemic. Third, when the world began to lock down, a lot of businesses were affected. We didn't go to do the usual things we did out in the open. And as a result, a large proportion of businesses hit were small businesses, right? So businesses that couldn't translate their work online, or businesses that were so small that if one storefront closed, that they were essentially closed, right? And what happens here is what we must understand about small businesses is that they actually run the economy in emerging markets, in developing markets. They are 90% of the businesses around. They are contributing largely to the GDP of the world, but most importantly, they employ people. They employ low-income communities largely, and 66% of jobs actually come from small businesses. So when these companies lose their source of revenue generation, actually a lot of poor people are affected, which contributes to that statistic you saw in the beginning, right? And the problem is that when we create relief for such businesses, it's hard to reach them. Even though a lot of governments have quickly put in place measures to reach small businesses, they often don't reach the right segments, right? So on the one hand, if there's a scheme out where small businesses can take quick loans, then those loans are more likely to be accessed by the biggest of those small businesses, firms with 50, 100 employees, which are still categorized as small businesses, but are not quite the ones most struggling. In fact, to our great disappointment, in news stories in the US showed that a lot of the relief that was planned for small businesses actually went to companies that were even publicly traded on the stock market. So that's one issue. The other issue is a lot of small businesses are informal. So unlike Europe and developed markets, these small businesses are not often registered. They're not often on rolls. They're not often customers of formal banks, right? So how do they even access this relief? They are largely left out of the roll. They are invisible. Let me come to some positives, though, that are important also to take in. One, even in the middle of the pandemic, one silver lining has been the issuance of government and social protection programs, right? 215 countries around the world implemented new social protection programs last year. What this means is that countries got their act together and tried to send payments to the most vulnerable parts of their population. The results were mixed. What I want to emphasize to you here is that countries that had already invested in an inclusive financial system, where people had bank accounts, digital IDs, access to cash in and cash out points, in those kinds of markets, these payments did better. People were able to not only be eligible, but actually get these payments into their hands, right? Not just a digital account, but actually withdraw and use them for buying crucial groceries or other relief items. Now, there are very good examples here that the World Bank has been documenting on this. India is a clear example where the digital ID and the bank accounts and the cash in, cash out points have really helped, transfer money to 500 million people in a matter of months. But there are many other countries that are great examples of what has happened. And that has actually paved the way for a lot of other markets and a lot of other governments to think about putting those systems in place now, so that when the next crisis comes, whether it's a health shock or a climate shock, that these countries are prepared, that they know how to reach their people, which is about reach, but that they also make the right people eligible, right? So like have those digital roles, have people in those systems, and know how to reach them in a moment of crisis. It's also been a positive for arguments like payments as a permanent kind of solution from governments, right? So think of universal basic income. These are arguments that are becoming stronger today. Whether they will be able to scale, we will see. But I think what's important is that there is now a growing conversation about whether such payments can have an impact, right, on people, and can lead to kind of a permanent sense of well-being and welfare. Europe is already at the forefront of these kinds of payments, right? But the rest of the world has to catch up, and more evidence has to be made available. Another positive that I want you to think about, that is pretty obvious around us and would have been noticeable to you, is that in many emerging markets, um, COVID arrives at a time when already the process of digitization of work and finance has been afoot, right? So, like, already big platforms have been emerging that employ workers, that provide a platform to small merchants. And in the pandemic, all this has only increased more because customers like us, stuck at home, who are wealthy and affluent, have been relying more and more on these digital services, right? And they are more often than not delivered to us by workers who are low income and by small businesses who are, very small and underserved. So this kind of phenomenon is only set to grow, and it's particularly visible. It's visible globally, but I think if you went to the biggest cities of India, Indonesia, Nigeria today, you will see that this is becoming a pretty big part of the fabric of these cities. You'll see delivery agents everywhere going on their bikes. You'll see rides that are being taken, and you're beginning to see a change in how these markets work. Changes are happening in the rural areas too, with agricultural value chains, but I think the phenomenon is most visible in big cities. The digitization, therefore, that I'm talking about now is broad. It's not only digitization of finance and financial accounts, but it's actually digitization of how people live, work, and access social safety nets. So it's important to see how this will grow. I don't think this is a phenomenon that's reversible, although it comes with potentially a lot of risks that we need to pay attention to, right? So people are more and more vulnerable to shocks and to being exploited. But this phenomenon seems to be here to stay. Today, 1 in 3 workers in 4 of the most populous countries of the world, so this is India, Indonesia, Brazil, and China, count platform work as a secondary source of income. 12% of workers in China are platform workers. So this is really growing, and we need to understand the linkage between financial inclusion and this kind of digitization. Let me then conclude with what is, in my view, 4 kind of directions for where financial inclusion goes from here, and what role kind of large scale financial infrastructure plays, and where is it that we see change having to be made and impact to be sought. So let's start with the idea 1, which is essentially what I just said. The future is digital, right? That's where we're going. But as governments and as financial service providers, we need to ensure that everyone is taken along, right? So why do I say that? Today, just like Martha mentioned, financial inclusion is incomplete, right? We're still missing 1 billion people from digital account ownership, and this work has to continue, right? And without the digitization of financial services and identities of people, we not only now stand to leave them financially excluded, but potentially excluded from all kinds of other things like their work, but also things like education, right? Think about all the children, not only from affluent communities, but also low-income communities who've had to go to school on a cell phone, which if it's not the right cell phone, you're looking at kids losing out a year of education, right? So what we think are the 4 main kind of areas or things that we need to equip people with is a phone, like a data plan, a financial services account, and then a distribution network where people can go in, take out money, put in money in a way that is easy and simple, right? Without this, we will exclude people even more so than we are doing now, and exclude them out of even more areas of opportunity for them besides finance. And particularly, women, rural populations, and people who are older will face these gaps more significantly. It's not only about the people, but it's also about the financial institutions that serve these people. More often than not, low income people are served by MFIs, microfinance institutions. Microfinance institutions have provided the world with so many insights on how to serve the poor, but today are facing a very crucial moment where they must either digitize, modernize, and scale, or become irrelevant to a vast set of business models that are emerging, right? Whether those are digital banks, merchant cash advance companies, digital credit. MFIs must catch up or remain marginal, right? So we at CGAP think this is a very important area for work, and we're investing our time and resources in it. At the same time, without the world's intervention, large interventions, new business models are emerging, right? You look around Africa today, you are seeing business models like PayGo, digital credit come up that are scaling and are reaching low income communities, right? The impact of them and the evidence for how much change they cause is still coming in, but it seems clear that new models are emerging. We as an industry, financial services industry, and as a kind of development group need to focus on these models being pro-poor. Digital credit helps poor people tide over kind of cash issues in the short term, but might also lead to big risks. PayGo, on the other hand, is something that clearly impacts people's access to electricity, education, free time for women, and possibly does so in a way that's more sustainable. So we need to invest in the right types of models and digitize the right kinds of initiatives. Second, we cannot forget women, right? It's very obvious mathematically that full financial inclusion means that we take the women along. So what does that mean? It doesn't only mean that they have an account and they have a cell phone, but that they actually know how to use them and they have the right skills and empowerment and permission to use them, right? So today we're seeing research which shows that even though a woman has a phone, in Mexico and China, a third of them may not know how to use those phones for just surfing the internet, let alone financial services. So we move beyond access and use to issues like skills and even issues like social norms. Are women allowed to use those phones? Are they allowed to have a financial life that's separate from other members of their household, right? Finally, the effects of this are not just altruistic, let's be nice to women, but actually women contribute to the economic growth of a household and an economy, right? And there is enough evidence to show that this is happening. In the US, in the 50 years between 1940s to 1990, women contributed 0.5% every year to the increase in real GDP. These are significant numbers that I think emerging markets need to focus on, and we'll see more action around. Third, financial services must now be embedded in people's work, right? So what do I mean by that? As platform work is growing, people need support to maintain these livelihoods. These are precarious livelihoods. Digital work comes with its own risks and comes with its own kind of challenges on how do you make the system work and get the best out of it, right? There are huge labor risks that I won't get too deeply into, but they are significant. In this scenario, can access to upfront capital that's directly tied to your work be helpful? Can insurance that helps you stay on the job or make minor repairs to your car or your cell phone to access those gigs, are those things possible? Right. So this is work that I am leading at CGAP today around how can financial services be embedded responsibly in platform livelihood. It's an area of work that involves a lot of stakeholders to get together. Platforms, the financial institutions, governments, donors, right? Everyone needs to collect around making this work more responsible and more accessible. Finally, let me conclude by saying the importance of large-scale financial infrastructure cannot be emphasized more, right? One of the big successes of financial inclusion are markets like Kenya and India, where the public sector and the private sector have participated broadly and deeply in providing large scale infrastructure that benefits people and new fintechs and business models, right? So when low income people have access to things like reliable electricity, cell phones, but also things like their own digital ID, bank accounts, then things can really become more accessible to them. When payment systems, like the payments that we do from one person to another or from a business to a person, become cheap, interoperable, and instant, what happens is a large number of business models can be built on top of that. When everyone has a bank account and almost everyone can make a payment from a bank account to an account or a wallet to an account or a wallet to a wallet, what happens is it incentivizes large number of fintechs to participate and diversify the choices people face, right? So this is the work not only of providing infrastructure, which is public-private partnership driven, but also ease of regulation that allows that innovation to exist, but does so responsibly. The focus should always be on customer experience and consumer protection. We're learning important lessons here, especially around data and how data will be shared widely around the world to benefit not just us, but large communities of small businesses. There are huge risks here that we need to learn lessons from each other and act in a very agile way. I'll leave you with 3 questions that we always have now begun to ask ourselves when we do our work, whether it is work with the private sector, policy, or even donor and investment decisions, right? Does this intervention serve the poor? Does it provide something that they actually need, right? And in a way that's obvious. And then once we have a need and it's serving the poor, is it actually doing so in a way that's responsible? And I think these questions can really help us guide the building back that will happen post the pandemic and will make it happen in a way that's newly more inclusive than we have been able to be until now. So thank you so much for this, and hope this has been of interest to you.
Thank you, Gayatri. It was great to have you with us today, even if you are at the other side of the planet. Thank you very much for taking time to explain so many interesting things. And you leave us with 3 questions that I think it's very applicable for all the business that we have, and not only in the financial in the financial sector. We will now continue with a study case with Kotani Pay. Their mission is to empower the millions of Africans without internet access to connect to financial services. In this way, we will digitally welcome Felix Macharia, who is the co-founder and CEO of Kotani Pay. Before that, he co-founded EOS Nairobi in 2018, a node validation company. He also represents EOS Nairobi as a co-trustee of the Africa Digital Asset Foundation. It has a non-profit organization built by African blockchain startups in 2018 to develop protocols, frameworks, and standards to enable blockchain adoption on the African continent.
Right, so I'm going to briefly talk about the work that we do at Kotani Pay. I hope that my screen can be seen. So at Kotani Pay, we basically have built a technology stack that connects blockchain protocols, decentralized applications, and fintech companies to local payment channels in Africa, right? So we basically looked at the advantages of blockchain as a technology. So in terms of costs, it's very low. If you were to look, for example, at the particular blockchain protocol we use at Kotani Pay, which is the Silo protocol, for a $5 transaction, you're looking at a cost of 10 cents if you're using the Silo protocol. If you're using something like PayPal, that's $1. If you're using something like Western Union, it's about $3, right? So in terms of cost, it's really low. In terms of settlement times, again, very short settlement time. So compared to other means of remittance where you're looking at days or hours. Blockchain transactions will settle in seconds to minutes, right? And then there's also the cryptography side, which creates, security and enables trustless transactions. So it reduces on the need for intermediaries. So we looked at all these, advantages of blockchain, but then we realized that there's a problem. And the problem is that most blockchains today are built with a smartphone user in mind. And that for Africa doesn't work very well. If you look at the 770 million mobile phone subscribers in Africa, a vast majority of them still use, first generation phones, also known as SMS phones or push button phones or feature phones. These phones have no access to the internet. They, work mainly through SMS-based interfaces. So the unique thing that we did at Kotani Pay is we took the blockchain and connected it to SMS-based interfaces and mobile money, which is widely used in the continent. In a country like Kenya, we have 92% of the population using mobile money for their day-to-day payments. So we connected the two technologies together and enabled organizations to then transfer funds from the blockchain to local currencies and back. So then that creates, a couple of unique value propositions. One is you don't need the internet to access our service. The payments can be made by SMS. You can access the service through an SMS code, right? So you key in a code, you get an SMS menu, you choose what you want to do. Do you want to send money? Do you want to withdraw cash? And all these transactions are actually being done on the blockchain. So the backend is a blockchain, but you get an SMS front end. You don't need a bank account to make these transfers. And if you look at the processing times, if you're using Kotani Pay, they are much shorter than compared to other providers in the industry. So we have been fortunate to work, on a number of use cases across a number of sectors. These are some of our clients across e-commerce, microfinance, the NGO space, and so on. And we charge a 2% fee on the value transacted for transactions below $100,000. So let's look at some of the use cases that we have enabled with this technology. So one very obvious one is universal basic income. You will hear a lot of people talking about the potential of blockchain technology increasing financial inclusion. And that's true. That's true if you're able to connect African native technologies to the advantages of blockchain technology. So we partnered with the Refugee Integration Organization and Impact Market to make universal basic income payments to refugees in various camps in two countries, Kenya and Ghana. And basically these funds will be sent from the US, from Europe, and they will be sent via stable coins. So the stable coin that we're using in this case was CUSD. And then the end users will receive these stable coins in their wallets, the Kotani Pay wallets, and then they could cash out to local fiat currencies, usually to their mobile money accounts like M-Pesa, using Kotani Pay. So these refugees are able to receive daily income through the blockchain. They might not be aware that they're actually using the blockchain, but it's what is powering the back end. We have also worked with Kosali, which is a microtask platform based out of Silicon Valley. And basically what they do is they put out tasks. So they work with big organizations like Appen. They source for jobs from the likes of Airbnb and Uber. And these are AI data annotation jobs. So if you think about computer vision algorithms, they usually require a lot of data in the form of images. And these images need to be annotated. The annotating aspect is really basic. So you just need to say, this is a cow, this is a cup, and so on and so forth. So what Kosali does is it takes all these jobs, aggregates them, and then sends them out to users in developing countries, emerging markets, basically. And the users can annotate the jobs on their phones, and they get paid in cryptocurrencies, usually stable coins. And then they can use our technology to cash out to their mobile money accounts. We have enabled lending as well. So we have worked with Pezesha, which is a small and medium enterprise lender based out of Kenya. So it has created a marketplace where businesses can meet with investors. Businesses can get loans from investors. Initially, Pesesha was only sourcing its funds mainly from traditional lenders, banks, and the like. And then they discovered there's a lot of liquidity within the blockchain space that they can tap into, but they didn't have a way to convert. And that's where we enable them with our technology. So there are a couple of use cases, all the way from lending to saving to microfinance to humanitarian use cases that you can enable with this technology. In terms of traction, we didn't start very long ago. We started in November, sometime in November of last year. We've grown to about 22 companies. So far processed close to $500,000 since the beginning of this year. And based on conversations we are having with our customers, are looking to process about $3 million by the end of the year. We are currently live in 3 main jurisdictions. There is Kenya, Ghana, and Zambia. And we have a couple of other jurisdictions that we are planning to go live in very soon. So if you know Africa, it's a big continent, about 55 countries. We have been very selective in the places that we choose. And of course, we are compliant with the payment services and banking regulations. In terms of the strategy we currently follow on the continent, we are mainly focused on the work of connecting businesses to local payment channels. Like I mentioned, using the blockchain, connecting to SMS, mobile money, channels that are used by most people on the continent. We also are looking to enable some merchant payments from Asia and remittance, especially for North America and Europe. And these are use cases we are currently undertaking. We have been fortunate enough to have raised some money from Flori Ventures, from the UNICEF Crypto Innovation Fund, from CELO, and we'll be going for our seed round very soon. So this is a team. We're about 30 plus years experience in fintech, and we welcome anybody who wants to engage with us to do so. Thank you.
Thank you, Felix, for this captivating case study on Kotani Pay. Let's keep going with a roundtable now on how fintech can drive the future of social impact finance. To participate in this discussion, we are welcoming Manon Loison, Head of Marketing at the Luxembourg House of Financial Technology, as our moderator. She will be joined by Simon Schwall, founder and CEO of Microfinance, with Apricot Wilson, Deputy CEO for Luxembourg Microfinance and Development Fund, and Jurgen Hammer, Managing Director of SPTF Europe. Please, Manon and other speakers, I let you introduce the subject, and while we connect with Jurgen, as he's joining us remotely. Thank you.
Hello, everybody, and thank you for being with us for this afternoon. I have to say I'm very happy to be back in real at conference and see people, so that's cool. And thank you, Simon. You traveled from Israel, I think, for being with us today. And thank you, Apricot, as well. You just landed yesterday from the UK as well, so it's cool to have you back in Luxembourg. So yes, we are going to talk now how fintech can drive the future of social impact finance. And you know that at the LHoFT, so the fintech hub in Luxembourg, anything that is related to financial inclusion and how can fintech foster financial inclusion is a very important topic for us. And we have a program, Catapult Inclusion Africa, where Simon was part of, and where LMDF is also a partner. That's a subject that we are working together. So yeah, very happy to discuss with you this afternoon. I don't know if Jurgen has joined us yet. Not yet. Well, okay. Maybe then I will just let first Apricot maybe to present you in few words. So we start like this.
Yeah, of course. A bit of the microphone's working. I have to say, it's so nice to be back in person, present at the ICT Spring. Must have been a few years since we last spoke at it. And I suppose what's been impressive is how much technology has enabled us to stay together over the past 2 years. But gosh, it's nice seeing friendly faces in front of us again. My name's Apricot. I work for Investing for Development CGAP. We've got 2 funds, the Luxembourg Microfinance and Development Fund and the Forestry and Climate Change Fund. Of Of course, our focus in the Microfinance Fund is very much on financial inclusion. We're very interested to see increasing numbers of more technologically enabled models passing through our investment committees. So it'll be interesting to share perspectives on this today.
Thank you. Simon, a few words.
Hi everyone, I'm Simon Schwall. I'm the CEO and founder of OCO. Prior to that, I was also working in a similar space. I was working at BIMA, providing micro insurance to unbanked populations. At OCO, what we do is we replicate the same model, but bringing this time crop insurance to unbanked farmers. We do this in Mali and Uganda, and we have the ambition to be present all over Africa. We graduated from the Catapult program from the LHoFT about 2 years ago, I think. And yes, very happy to be here in Luxembourg and be part of this discussion.
Thank you, Simon. So I'm asking again, not yet. Well, I think Jurgen will join us. So we have about, yes, he's here. Perfect. Jurgen, 2 seconds. 3 minutes, I don't know. It depends. Okay. So we have about 25 minutes for our roundtable this afternoon. I think we'll divide in 3 parts, because here in front of you or via the screen, you have 3 amazing professional and entrepreneurs covering different aspects of the topic we are talking today. So first, we'll try to understand how fintech and what is the context around social impact finance, what actually it means in our world today. Then we're going to understand innovate for the better. So basically how financial technology is improving and impacting for the better the life of the underbanked. Gayatri also explained that a bit. And the third point, we'll try to understand how social impact finance is actually becoming quite the new normal in our world today. I'm asking again, is Jurgen with us? Yes. Hello, Jurgen. We see you. Hello.
Okay, so I'll just do without this. It works. I can hear you well.
That's perfect. Okay, so welcome, Jurgen. You're here with us, so we are really happy you join us. I was just giving the floor to Apricot and Simon to present them a bit in few minutes. Would you then do the same for our audience here?
Yeah,
Please.
okay. Oh, so you already started with Apricot and... Okay.
We did.
All right, good. So sorry to be late. My name is Jurgen Hammer. I'm the managing director of SPTF Europe, the Social Performance Task Force, which is the worldwide network for microfinance created in 2005 to develop a standardized, harmonized language for evaluating social performance and our impact. Social performance or microfinance, we represent the microfinance industry, comes with this promise of financial sustainability and achieving a social objective. So we have been working on how to define that and we can share some of that later on in the discussions.
Okay, perfect. Thank you, Jurgen. So I think I will start with one basically simple question for the 3 of you. Basically, how would you define social impact finance from your own perspective? I think I will leave the floor first to Apricot.
I was going to say, you said this is a simple question to start with, but the many hours that I have spent, particularly with Jurgen, discussing this area rather belies it. You will often think that social impact financing, that must mean providing financing for social entrepreneurs. But of course, this begs the question, what is social impact? And I think many of you are extremely familiar with the taxonomy regulation and quite the many nuances and complications of it, and the guidance we've seen already on the environmental side, which demonstrates this is a very complex area. I actually found a rather nice way of looking at it. There's a recent report from the World Economic Forum, which had interviewed a lot of millennials, and they were looking at what they expected from businesses. And the key aspect that they expected from businesses was an improvement to society, which is a very nice way of looking at things, though of course begs the question, what does improving society mean? One way we are looking at this more and more is to consider alignment with the Sustainable Development Goals, the SDGs, how a business aligns with these 17 goals. And working in finance, of course, we've got a good impact that is highlighted within 8 out of 17 of the goals, as well as the possibility, of course, to support the other goals. So that's one way of looking at the social side, but we're providing financing as well. And I think you shouldn't lose sight of the fact that if you're making a social investment, it needs to be something that is financially sustainable. We're not talking philanthropy here. We're talking something that will have an impact, but also a financial return in the long run.
Thank you, Apricot. I was going regarding the SDG goal, give the word to Jurgen, but maybe Simon first, because the last point that you mentioned is very interesting, and we had this conversation a lot in our Catapult program, is how to create impact, but also how to support business that actually creating wealth. And this is very important because you cannot have growth without, or impact without growth, I mean, vice versa. So Simon, maybe a word on this.
Yeah, so I tend to be more pragmatic, meaning that anyone can say they do this. There's no very strong definition of an impact fund, for example, at least as far as I know. And some funds would, for example, invest in big pharma, in huge pharmaceutical companies, and claim that it has social impact because it's improved the life of people, but they don't really change their intention behind the investments. So it's more of a marketing trick. So for me, when I look at funds, I mostly try to find out what is their motivation, what is really what companies did they invest in, discussing with the fund managers to understand what metrics they're looking at, to understand really if they have the ambition to improve the life of people, or if it's mostly positioning or a marketing trick. So unfortunately, I don't have a very good answer, but it's more about the intention and the intentionality of the investment than about any word or label or title. Yeah.
Jurgen, also maybe your definition of social impact finance. Yeah,
I'm very happy. I mean, we didn't share our presentations ahead of this panel, and I think it's sometimes interesting not to do it ahead of time, because I had one keyword which I wanted to say, which defines for me social impact finance, and that was mentioned by Simon, and it was already said by Apricot when she said about what do people expect. It's intention. Social impact finance is about the intention of doing social and environmental good in addition to financial sustainability, and that of course is translated. It's about defining objectives. It's about defining value to all stakeholders, staff, clients, governance, environment. It's about measuring if we achieve these goals. So basically, for me, I would see 4 steps. One is, as I said, the intention. The second is the identification for any company, financial service provider, any company. The identification of risks and opportunities. The internalization, which is internal processes and risks of client, and then the action to say I adapted my products or I improve in internal processes. And from our experience in financial inclusion, by creating standards, universal standards for social performance management, which have been in the industry now since 2012, we try to contribute to defining those best management practices that help any organization to achieve a triple bottom line strategy as it intends.
Thank you, Jurgen. And I think you can also have a look on the SPTF website, where all this, I would say, SDG goals and all the path is very well explained. It's very, very interesting. If we go further, because the subject was also fintech and social impact finance. So what is the impact of the fintech movement in this business that creates impact? And I'm asking that to you first, Simon, because you raised a lot of money back in April, 1.2 million, if I'm not mistaken. So congratulations first. But yeah, how are you creating impact with this, and how do you grow your business?
Yeah, so with fintech, you can change the view of finance. Finance was not so much related to social development before, but as we saw in the previous presentations, it's kind of at the center of all the livelihood of people in developing countries. So if people can have access to basic financial services, it unlocks a lot of opportunities for them. We saw that starting with I saw that at least starting with mobile money, when people used to have to travel with cash in hand back to their family, or trust a truck driver or bus driver to bring the family the cash that they wanted to send them. Suddenly it can be instant, it can be secure, and it saves them a lot of time and risks. So fintechs are a lot of fintech in developing markets have a very strong impact on social development. It opens the possibilities to people to open stores, to sell the goods, to connect with business opportunities. So yeah, there are a lot of opportunities with fintechs to have a social impact. And investors are starting to see that. So what's interesting in our fundraising is that there are 3 investors, and the impact investor is actually the one putting the smallest ticket. It's Mercy Core Ventures. So the other investors, they didn't really invest for the impact so much as because they saw a big opportunity. So I think there are 2 things. There are new opportunities created not only for impact funds but for any funds with these technologies. And also behind every fund there are humans, and there are investors who have their own ambition. So even if they are not an impact fund, they still want to be part of investing in something good. People who have good motivations, entrepreneurs who do things with passion. So I think that also explains this shift.
Yeah, well, we'll come later to the real KPIs that you are looking for, and it's very interesting that you mentioned the 3 investors in this fundraising and see if they check the same with you and all the same KPIs. But before I'm addressing the same question, maybe to you, Apricot.
Yeah, I was just thinking it's very interesting hearing it from an entrepreneurial perspective, because we've got a perspective of how fintech is actually helping the impact investment industry to develop. If you consider there's been huge growth in the funds under management in this area, and you could say there's been 3 sort of core drivers for this. One is that people are really looking to have investments that reflect their values. The other is that people are increasingly realizing that impact investment does in many instances make good business sense. And thirdly, of course, there's more global frameworks and regulatory pressure in this area. And I think what's interesting is that fintech is also able to contribute to these 3 core driving forces that are making the impact investment industry grow, notably with regards to allowing investors to access investments which reflect their personal choices. I was just thinking of the platforms we've got available, how they're looking at ESG considerations, or in fact, one of the other players in the microfinance market, Kiva, which really does allow you to think, how can my investment reflect my own values? So it's good to hear it from the entrepreneurial perspective, but it's also on a whole industry perspective that we're noticing these changes.
Yeah, okay. Jurgen, do you want to comment on that?
Yeah, and I would like to challenge a bit. Be a bit. I would love to use an example. In microfinance, we have 2 big challenges, among many others. One is that clients live everywhere in the countryside, etc. We have to reach clients that are far away from banking offices. And of course, for that, fintech and mobile money, etc., is a fantastic opportunity to reach those clients. We have another challenge as well, which is the very high cost of the loan application process and the loan management process compared to a small loan size. It's the same time of work that you need for a 20,000 euro loan or a 200 euro loan. And of course, you don't get the same. So for all of this, fintech has a lot of potential to really bring efficiency. Unfortunately, and I forgot one thing, but we are also exposed in our market to the fact that we charge very high interest rates to the poorest people that we try to include in the system due to these costs. Fintech could be a solution. And where I want to provoke a little bit is to say, yes, fintech can be fantastic, but so far it has not held its promise to seriously contribute to lower the cost and to bring these benefits of technology and of efficiency to the end client by making the loans accessible to interest rates that are comparable to what we would pay.
Well, On that note, Jurgen, if you're challenging, then I will give the floor again to Simon, because I think he has something to say with that, and all the farmers that he's helping in Mali, for instance.
Yeah, no, I think it takes time to build the models, and there's a big challenge of these models. You can reduce the cost if you reach scale. So the big challenge, I think, for fintechs are to cross this chasm, that achieve a scale that is big enough so that they can do the economies of scale and then provide the real value. We see a lot of startups, unfortunately, that are promising, but then when it comes to scaling, it's really tricky, whether because they lack investment, because the infrastructure is not ready. So we're getting there, but it's just taking some time. We can already see that transaction costs on mobile wallets is going down, because now startups are challenging the large companies like MoneyGram, Western Union, or even the mobile operators. So there's a big fight, war on price between the different mobile wallets, and it's to the benefit of the end users. So it's starting to happen. It's taking some time, but I think once you have a few success stories of companies that grow to a large customer base, it will be more visible.
Yeah, and I agree with you in that. That's why we are here to talk about it and to promote this. So back to the question we had. What are the key KPIs that indeed, Simon, you are looking when measuring your social impact? And also, once again, I'm back to your three investors. Are they asking the same?
Yes. So we are looking at financial inclusion metrics to start with. So how many people have access to insurance now thanks to OCO that didn't have insurance before? So this is the first time they access insurance. And then how many of them access a loan because they had insurance? So first is really the access. It's the easiest to measure. We can just count the number of users, ask them if they had insurance before. And then we look also at climate resilience. That's a bit more difficult to measure, but we look at what happens to farmers that were insured versus farmers who were not insured. Do they recover faster, etc.? But that takes more time. And now we understand that really the investors, the NGOs, the development organizations, it's easier for them. Everything is falling into the standard of the SDGs. So we're trying to make this fall under the different SDGs targets and objectives. So yeah, the investors are quite, again, because there's no real label or strong, not yet, maybe Jurgen, you're working on that as well. But everyone can come with their own metrics. So they asked us to tell what we can provide. They gave some suggestions, but there was no strong requirements. But over time, everyone is trying to fit into the SDGs so that everything is more readable and understandable.
Okay, so maybe to Apricot and Jurgen, not so much about the KPIs, but about those SDG goals. Maybe a word on this, and are they too large? Do you think it's something that's going to be refined? How to, your view on this?
Actually, I wanted to comment a bit on what we've just been previously saying about there's this tendency to see outreach as such a core metric when it comes to social performance. And in fact, we really need to it can be very difficult for fund management firms which may have quite a limit, which should have a long-term time horizon, but it may be quite difficult for them to really consider how the investment is going to change their lives over the course of 10 to 15 years, and trying to have more of a progression from outreach metrics to impact metrics is absolutely fundamental, and also ensuring that there's processes in place, that there's various initiatives in place that I think Jurgen will go into much more detail about, that ensure that this outreach is translated into an eventual impact. And I think this is a particular concern perhaps among some of the fintech entities that have really focused on growth. And if you're focused on growth, are you considering your financial stability in the long run? And if you're not considering your financial sustainability in the long run, how can this really translate into the long-term change that impact engenders?
And how do you think they should, answer that? What are the solutions?
What are the solutions? Well, I think working very closely with Jurgen is a very good solution for this. His work in the Social Performance Task Force is absolutely invaluable for ensuring that we have good practices, notably in terms of client protection, in place that ensure that outreach will eventually translate into impact.
I think the other thing that we need to bear in mind that is as a financer, it's your responsibility to take a long-term approach and not be driving constantly for certain KPIs, but to be thinking sustainability needs to be at the base of everything that you're supporting. It takes time. Change does not happen overnight, as I'm sure is far too much of a cliche to mention here.
Jurgen, then, how many fintech do you work with? The whole planet? Do you work with Simon?
We would love to work much closer with fintech, and I mean, thanks to the connection and to the cooperation now, also with the LHoFT, we were able to participate twice in the Catapult events. I mean, we consider that technology is a means to an end. And the fintech is providing a financial service to a customer. So what we are convinced of is a lot of the learnings that we have already and that we continue to have in the financial inclusion space are really applicable, to any organization that has that objective. Just a quick thing, but when you said the KPIs for impact, I said, but this is as Apricot also mentioned, this would take days. To discuss it, because there's a huge variety. It depends on the objectives. When we started in microfinance, which is an industry, as you know, that started 40 years ago, it came with a promise of social performance. And many organizations in the 90s, 2000s started to evaluate what is this social promise that we are doing. And in 2000, we had a pretty big mess, I would say, to if you allow me that term, of individual initiatives, but they were very important because those were the practitioners on the ground that were experimenting. What is valuable to measure? What makes sense for me as an investor, but also from the company itself? And we as SPTF in 2005, the idea of SPTF, we were created to get everybody on the table and say, what have we learned? What are the most important commonalities? Because at some point, we will have to agree on what are we talking about. When we speak about social performance, impact, environmental performance, etc., like we had to agree on what we talk about when we speak financials with IFRS. It's a standard. So what we do is we have a pretty active outcomes working group, which, as Apricot said, really goes beyond the outreach. In microfinance, we have measured the percentage of women and the percentage of farmers and the number of clients for many years, which is interesting. But that's very first level, and that's not what we really need to understand better. So we have a very active working group. We can only invite, a larger variety of organizations to join this work. I will put the link of this working group in the box. You can reach out. You can check on the internet and reach out, of course. And I wanted to share one specific report that we have on our webpage, so you can look at that, on social outcome indicators by one of our members, to give you an idea of, what is the shape that this is taking. So certainly too early to give you the 10 KPIs that would define your impact. But what I can say, and Apricot, thank you very much for underlining that, what we need is a coordinated effort to, as soon as possible, agree on what are we looking at, because investors, clients, everybody, we need clarity on the concepts. And hopefully, in a year or two, I'm very optimistic, we will be able to speak about KPIs precisely.
Yeah. But like you said, it comes from experience. Well, regarding the time that we have left, I had also a question regarding how fintech innovators can play helping the traditional financial sector to pivot towards social impact. But I'm not sure we'll have time for this question. I would like to close on reversing the question that was for this panel. Can we say that social impact finance can drive then financial technology and fintech? Can it be actually on the other way around? And that's what you started actually to mention, Jurgen, taking the experience from the ground, from the entrepreneurs down the ground. Simon.
So I think so. If there is more funds that are dedicated to financial, to fintech that have impact, then it will drive entrepreneurs to try to think the solutions in a way that they can match this box. They can talk to these investors. I see that's already happening a little bit. Like we see I see companies that come to us saying, "Oh, you raised from an impact investor. What did you do? What are the metrics that you had to show? Because we're doing this, and we think that maybe it would be applicable. We actually can have some impact." So they are changing their product or changing the way to distribute to start to attract this new capital that is available. So indeed, I think it can go the other way. Fintechs can help make the investment have more impact, but also if there's more impact investors, then it will start to create opportunities for entrepreneurs to think of new business models, to be able to become eligible for this kind of financing.
Apricot on this, maybe.
I was going to say that I think as an investor, you have huge responsibility. The decision of who you will allocate financing to and who does not receive financing does end up shaping industries. We're invested more in microfinance, in fintech, and I think when we're investing, we're constantly looking at social performance metrics. We're constantly looking at the initiatives that our MFIs are taking part in, and in all our contracts, we include social performance covenants. We also include certain monitoring templates, and so the sort of expectations that we have help to shape some of the industry standards that we see. And of course, it's even more important to join in working groups and work together so we can be a sort of shaping force in the way that industry develops.
Speak from one voice.
Yes, I would think that's very important in this area. And I imagine Jurgen has even more to say on this.
Indeed, Jurgen.
No, just maybe to complement. I think it's very well summarized already. In my view, the traditional economy and the traditional finance only focused so far on the low-hanging fruit, if we can call that, the easy clients generally. And a big part of the population has been considered too difficult to reach, too risky, too far, too expensive, etc. So technology is obviously has the means to address these challenges in a totally different way. And I would really invite the fintech industry to put that on top of their objectives and on top of their agenda to help reach clients or segments or higher hanging fruits, to say, through the limited capacity that technology provides to us today. And that will be the push for a shift to the existing, I would say, the traditional actors, which are some often more rigid and, they have their comfort zones. But I think fintech here can really be the leader for a new definition of economics and of business.
I couldn't more agree, and I'm not saying that because I'm working for the fintech hub in Luxembourg, but yeah. Well, we are not closing this roundtable. I want to thank very much Apricot for joining us, Simon and Jurgen. I will encourage you to speak to Simon and to learn more about OCO, and the same with the SPTF and LMDF with Apricot and Jurgen. And we're very lucky actually in Luxembourg to have all these stakeholders that are working together into the microfinance and financial inclusion. And I think it's not well known. Yeah, we have amazing practitioners here. So thank you very much for your time. And see you soon. Thank you.
Thank you.
Thanks, Manon. Great to get us together and to discuss that.
Thank you.
Thank you to all of you, and thank you, Manon, for the animation of the roundtable. Please stay with us for a little advertising pause, and we will have a break before joining Blockchain for social impact speaker, co-author of Bitcoin and the Future of Fundraising, Connelly and Simon Schwall for a keynote speech on the business opportunity in serving the least including. Thank you, and see you later after the break. Welcome back, everyone. Our next guest of the afternoon is Connelly. She is a blockchain for social impact speaker and co-author of Bitcoin and the Future of Fundraising. She's passionate about using blockchain to solve the world's grandest challenges, a serial entrepreneur and angel investor. In this frame, she co-produced Trust, a graphic novel and motion comic that teaches youth about blockchain. She is presenting Blockchain and the Future of Decentralized Societies, and we are connecting with her right now. Hello, Han. Can you hear us?
Hello, can you hear me?
Yes. So welcome
Excellent.
on the FinTech Summit, and the floor is yours, Han.
Thank you so much. So I want to start off today by asking you all a pretty simple question. If I asked you if I could have 100 euros from you right now, would you loan it to me? What do you think? It's an interesting question. And for a lot of you, you might say yes. You might say, hey, this person seems nice. I think, I'd give her the money and she'd pay it back. But for a lot of you, you'd say, definitely not. And that makes sense because the reality is you don't know me. You don't know what I want the money for. You don't know if I have a history of repaying my debts. At the end of the day, you don't know if you can trust me. And trust is the underlying foundation upon which we've built our entire society. Now, when you go back in time to a moment when everyone lived in small towns and villages, every person that you transacted with was someone that you knew and someone you knew you could trust. But as the world expanded and global commerce became a thing, at some point in time, you had to interact with someone that you didn't know and couldn't necessarily trust. And this was the beginning of centralized trust providers. Essentially, groups like governments or corporations or other organizations that would sit at the center of two people in an untrusted transaction and provide that trust for them. Now, our entire society is pretty much built using this system. If you think about all the transactions that you make in a given day between yourself and a store or a corporation and a bank or governments between governments, there's pretty much a centralized player at the beginning or in the center of all of those transactions. And for the most part, this system works really well. It's enabled us to scale transactions all over the world in a way that wasn't possible when we were doing it in a peer-to-peer manner. But the challenge with this type of model is that when you can't trust the trust provider, the entire thing starts to fall apart. And that's where our whole society and what we've built it upon becomes very fragile. But I have good news for you today. The future is decentralized. And so today we're going to talk about blockchain technology and how it's essentially enabling us to go back to a time where we can make peer-to-peer transactions, but do it at a scale that's never been possible before. So I want to kick off by just going through some of the basics of what blockchain technology is. So blockchain is essentially just a word that describes an underlying technology that you can build under other things on top of. So essentially, a blockchain is just a ledger, a record of transactions. That's it. So if you imagine all those transactions between people and corporations and banks and governments, if all of that data was stored in one place, that's kind of like a blockchain. But all that data is stored in little chunks called blocks, and the blocks are connected in the format of a chain. Now, there's many different blockchains out there, and each one has different functions that make it better to use in certain use cases. So, for example, you've got Bitcoin, there's Ethereum, there's Algorand, there's Cardano. But at the core of it, this is what a blockchain looks like. Now, what's neat about this is that each block is cryptographically linked to the block before it. But you can kind of think about that as though each block has a little photograph of the block before it coded right in. So if I wanted to hack into one of those blocks and hack into one of those transactions, not only would I have to do it in that block and with that transaction, but I would have to hack every single block that came after it. Otherwise, that little photograph wouldn't match. Now, there are three properties of blockchain that I want you to remember. And the first is that they're public to all users. So if you have a private blockchain that's used between, say, a group of banks, all the transactions in that register, in that ledger, would be visible to all of the banks in that network. But if you use a public blockchain like Bitcoin or Ethereum, all the transactions are visible to anyone in the world. So if you loaned me 100 euros and I said, oh, I never got that money, I don't owe you anything, you could point to the transaction on the blockchain and say, here it is, and show everyone that I did in fact owe you the money. Now, the second property of blockchain is that they are immutable, which means that once a transaction has been made, it can't be deleted or edited. So if you loaned me 100 euros and then I said, I never got it, you pointed to the chain and said, here it is, I couldn't go in and hack that transaction and edit it to say that you'd only given me 10 euros. That's just not possible. Now, the third property of blockchain is that it's power proof, which means that if you loan me 100 euros and I can't hide from the transaction and I can't edit or delete the transaction, if I were really good friends with the creator of a particular blockchain, I wouldn't be able to say, hey, I owe all this money, I can't pay it back. Can you just turn the blockchain off? Even the creator of a blockchain itself is not capable of turning it off. It's not possible. But if there's one property of blockchain I want you to remember above all the others, it's this. It's that blockchains are decentralized, which means that a copy of that chain and all those transactions is stored on thousands of computers all over the world. And these are computers like my laptop, someone in China's desktop computer, someone in Kenya's computer. And so even if I were able to hack into that one block and edit that one transaction and then hack and edit every single block that came after it, I would have to do it on thousands of computers all over the world at exactly the same time. And for this reason, blockchains are virtually unhackable. And subsequently, they're a single source of truth for every person on the planet. You can trust the information in a blockchain because we know that that information is accurate. Now, what's amazing about this is it enables us to go back to transacting in a peer-to-peer fashion the way we did when we lived in tiny villages, but do it at the scale that we've been able to achieve with centralized players, but without those centralized players, because blockchain essentially provides that trust for you. Now, this person is someone I hope that you recognize. He's a really incredible mind in the blockchain space. This is Vitalik Buterin, and he's the creator of the Ethereum blockchain. Now, he describes blockchains perfectly. He says, whereas most technologies tend to automate workers on the periphery doing menial tasks, blockchains automate away the center. Instead of putting the Uber driver out of a job, blockchains put Uber out of a job and lets the drivers work with the customers directly. Now, this is essentially what happens. Blockchain disintermediates all of these centralized players. And so when you think about our society, virtually everything we do is based on one of these centralized providers, and whether they're governments or corporations or other organizations. And so blockchains are going to completely transform the way that we organize society by removing these intermediaries and enabling us to connect directly with one another. So to begin to look at what it might look like to be a part of a society like that is decentralized, we're going to start at the very base level of society with people. And so I want you to think about what makes a human being a person. And the answer to this question starts with a passport. It's my passport. And before COVID started, when I was traveling around a little bit more, I was coming home back to Canada from Europe, and I had a layover in London. And I was going to my next gate to catch my next flight, and I realized I didn't have my passport with me. I'm freaking out a little bit because I know that if I can't find my passport, I'm going to miss my flight. I'm going to have to go into the city, get an emergency passport, and then buy a last-minute ticket home, which would probably cost me $2,000. But what got me thinking about how crazy it was that I was not a person in the eyes of the world without this little piece of paper that could fall out of my pocket at an airport. And that's because I don't have an identity unless the Canadian government grants me one. But blockchain is changing all of this. But what is an identity fundamentally? An identity is three things. It's a claim. So I would claim I am Anne Connelly. I have proof, like a telephone bill with my name on it, or some other piece of information like a utility bill. And I have attestations, like my mom would say, this is definitely Anne Connelly. I know this woman, she is my daughter. But in the way our identity system works today, essentially the Canadian government sits at the center of any transaction where my identity needs to be verified. And usually that's by handing over a driver's license or a passport of some kind. And so they act as an intermediary as a part of this process. Now, I got really lucky because I found my passport and I made my flight and everything was okay. But that type of situation is not the case for everyone out there. Do you know what this is? Take a close look at this picture and see if you can guess what it is that you're looking at here. Look at how enormous this settlement is. It's massive. And in fact, this is a refugee camp. This is the Za'atari refugee camp, which was home at one point in time to at least 80,000 Syrian refugees. Now, there's more than 70 million refugees and displaced people around the world today, and many of them live in camps just like this one. Now, a lot of people are living in these camps not for days or weeks, but for months, years, and even generations. And often this isn't because they don't have a country that will take them in. It's because they lack the identity documentation to prove who they are and where they came from, so they can get processed into that new country. In fact, more than 70% of refugees lack this identity documentation. But what's more critical about this issue is that they also lack access to that centralized intermediary that could actually provide it for them. They can't go back to their local government office because it's in a war zone, or because it's been bombed out, or because it's not safe for them to be there. And so people like this are put at a huge disadvantage in being able to have freedom and move into a new country because they don't have this documentation. Now, in some cases, governments don't allow people to have identity documentation because they're punishing them. So, for example, in America in the 50s and 60s, communists couldn't get a passport. And we've seen issues in China where they're removing the identities of the Uyghur Muslims, but this happens all over the world. But blockchain is having an impact here. Blockchain is decentralizing identity and taking government out of the center of those transactions and replacing it with a decentralized ledger. And essentially what this means is that each person will be a self-sovereign entity and will have control over their identity in a way that's never been possible before. So this is kind of a weird concept. So I'm going to give you a bit of an example of how that would look like in real life. So this is Pia Mancini and Santiago Siri. They're two Argentinians who are passionate about self-sovereign identity. And so when their daughter Roma was born, they wanted to make sure that she owned her identity before any government ever did. And so what they did was they started with some claims. They started with a claim with some proof and some attestation, and then they uploaded that to a blockchain. And here's what that looked like. You should be able to hear sound, so please let me know if you don't.
Hello, this video is the birth certificate of Roma City. So here is Roma City. This is Roma with her little friend Pantufla. Roma was born in the UCSF Benioff Children's Hospital. Here you can see her full name, Roma City. She was born at this hospital on November 6, 2015 at 2020 hours in the city of San Francisco, planet Earth. Her mother is
Pia Mancini. I was born in Buenos Aires, 12 May 1982.
And her father is me, Santiago Siri, Argentinian, born October 1st, 1983. We have two witnesses, Roma's grandmothers,
I'm Pele Herrero. I was born in Argentina, in Salta, in October the 2nd, 1952.
And the other witness?
I am Maria Marta Estrada, grandmother of Roma. I was born in Buenos Aires, May 30, 1947.
And to prove the timestamp, here we have the last block of the blockchain.
So what they did was they uploaded this video to a blockchain and then showed that timestamp. They showed the last block that had been added to the chain that would timestamp the video within a window of about 10 minutes on a particular day. And what's amazing about this is you now have an attestation, you have proof, and you have, a claim, proof, and attestations. And this will form the basis of Roma's identity that she can build over time by adding more proof and more attestations, making her identity stronger and stronger. Now, this may seem like something very futuristic, but it's already starting. In Brazil, they're actually issuing blockchain-based birth certificates, which not only makes it easy to link those to decentralized identities, but also is just a really efficient way to issue them. You don't have to go to the municipal office and wait for hours while someone fills in a paper form. It's all done digitally, but it's all done securely. Now, one of the benefits of having one of these IDs is that when Roma grows up, if she gets herself into trouble or is kidnapped, there's actually a lot of recourse that she can have as a part of that. So an example is that essentially more than 1.2 million children are trafficked around the world every year. And the United Nations is working with World Identity Network on a system that would essentially create an ID where you could only cross a border with someone who was in the inner circle of your attestations. So maybe your parents and your grandparents, but no one else. And if an attempt is made to take a child across a border, an immutable record is recorded on a blockchain so that no one can pretend like that attempt to traffic the child never happened. And so this will essentially reduce child trafficking around the world. Now, when Roma grows up and she goes to university, if she goes to McMaster University, which is my alma mater, she can actually get a decentralized certificate of her degree or diploma. And this is what that would look like. There should also be sound on this video.
Digital credentials are the wave of the future. And at McMaster Engineering, we're already there. For instance, we've launched a digital credential for co-curricular activity. And this coming June, every McMaster Engineering undergraduate student who graduates will get a digital credential. To do so, we're using a blockchain platform. Why? Because we believe in the sovereign identity of data, that data should belong to the student.
Blockchain is an intriguing technology and its uses are exploding beyond cryptocurrency. This was an excellent opportunity for McMaster to begin to explore blockchain, and this was a really good use case.
Once we give the credential, students own that credential on the blockchain platform. They can share it or keep it private. When they share it with employers, employers have an immediate link to verify the data.
The notion of being able to verify your diploma by using your phone was a very exciting one for us. Students now can produce it at a moment's notice for an employer, another institution, or even grandma.
So being able to share your degree with your grandma is interesting and fun, or with an employer, it's really handy, but the impact of decentralized identity is so much greater than that. This is Rahav Mohammed. You may remember her from the news a couple of years ago. She's the 18-year-old young woman who fled from her abusive family in Saudi Arabia. Now, she was flying from Saudi Arabia to Australia through Thailand. And when she landed in Thailand, the Saudi officials had called the Thai officials and told them to confiscate her passport. They were going to deport her home, but she barricaded herself in a hotel room and wouldn't come out until she was helped by UN refugee agencies. Now, she's safe in Canada now, which is amazing. But the reality is none of that could have happened if she had a decentralized ID. It couldn't be taken away from her. She could open access to it on any internet-connected device and prove who she was, where she came from, and where she was going. And so for me, when I lost my passport, I would have lost $2,000 and a day or two in London. But for Rahav, she would have been deported back to Saudi Arabia, where she could have been killed. So let's come back to the story of our refugees, but look at it from a decentralized perspective. So you imagine you run from your home with nothing but the clothes on your back and you arrive at a place like this. You can instantly prove who you are and where you came from on any internet-connected device, which means that you can get processed into an asylum country much faster. Now, because your educational degrees are certified on blockchain, it means it's going to be much easier to find a job because you don't have to prove that your education is legitimate. And with people who have cryptocurrencies based on blockchain, they can then take their life savings with them across borders much more easily. So for me, blockchain isn't about, Bitcoin or bubbles or, the craziness of the crypto world. It's about changing the lives of people like this and making the world a much better place for everyone to live in. Now, for many of you, this is a very new topic. And I promise you that 99% of the impact that blockchain will bring is still to come. And so not only will we get to redesign the society around us, but actually look at what our role as human beings is within that society and how we want to build and structure our future in a way that is fair and equitable for everyone around the world. So I want you to think about your industry. Are you in finance? Are you a banker? Are you in government? But most importantly, are you an intermediary? I bet that you are. And so moving forward, how is your organization still going to provide value in a world where intermediaries aren't required anymore? And so at the beginning, I asked you if you would loan me 100 euros. But in this decentralized future, that 100 euro would probably come, not from someone in this room, but from someone around the world in Kenya or China who would lend me the money in a peer-to-peer fashion over a completely decentralized network. And so as you walk away from this event today, I encourage you all to go home and buy $1 worth of Bitcoin and just participate in this whole new decentralized world, because I think you're going to love this world where we don't no longer need centralized intermediaries, but we have blockchain and we have trust. Thank you very much.
Thank you, Han, for explaining us in a very understanding way what is blockchain and how it can help us in the future to tackle future challenges. We will now continue with the next intervention from Simon Schwall, founder and CEO of Microfinance. Simon is an entrepreneur and micro-insurance expert. Today, he is with us to point out the business opportunity in serving the least included. Simon, the audience is yours.
Thank you very much. Can you hear me well? Yeah. Okay. So I'm Simon Schwall. I was born here in Luxembourg. I studied in a business school and I studied a career in consulting. So far, so good, right? My career took a serious turn when I decided to fly to the other end of the world and start a micro insurance service in where else than Papua New Guinea. So this is me and my team in Papua New Guinea. Working alongside them, I gained a real new perspective on financial inclusion, and I'm happy to share this with you today. Okay. After a few years in Papua New Guinea, I worked also in Fiji, in Vanuatu, in Egypt, in Senegal, and now as the founder of Oko in Mali and Uganda. And I've been exposed firsthand to the impact that simple financial services could have on the lives of their users. So we talked a lot about financial inclusion today. I wanted to make sure that it is clear what is the problem and what is the problem with financial exclusion. So to do so, let me introduce you to Ismail Diakita. he's the head of a cooperative in Mali. He owns land, and he could grow a lot more if he could access a loan to buy fertilizers and quality seeds. But when asked about his inability to access loans, this is what he says. I'll quote him. "I don't feel like I'm a full right citizen in my country. When I go to the counter, when a civil servant goes to the counter and asks for a loan, he gets one. When one of my seasonal workers go and ask for a loan, he gets one. But when the farmer goes, he's denied. You have no guarantee, you have no secured income, you have no insurance, we cannot issue a loan for you." Ismaila is not alone. Out of 5 billion adults in the world, 1.7 billion have no bank account. 2 billion have informal jobs. And if we zoom on Africa, it's more than half of the population that is unbanked, and 2 out of 3 people who live in the informal economy. They are cab drivers, they are housemates, they are street sellers, they are farmers, and so on. And not having basic financial services undermines their livelihood. Someone steals your savings, and you're left without nothing. The rain fails to come, and you lose all your revenues. An event forces you to leave your village, and you lose the assets that you thought you could rely on for your retirement. But I'm not here to talk so much about the problem. I'm not even here to talk about the positive social impact we could have by solving this issue. Today, I will talk about cold, hard cash. What is the business opportunity in solving this problem? So we could look at the market size. And usually you can look at how many potential customers you can have and what is their purchasing power. Traditionally, it has been easiest to go after the wealthy few. And banks have been really good at doing this. But there is just an as big opportunity in serving the modest masses. People who don't have much to spend, but they are the majority of the world population. Another thing is that here on the left, we're looking at convenience. On the right, it's about a necessity. And I don't remember much about my time in business school, but I remember one thing is that when you spot a huge need, you identified a big business opportunity. The problem so far is that there's something blocking the access to this opportunity, and that's scalability. How do you bring this service to millions of new customers at a low marginal cost? But technology is solving this issue. So I'll tell you today about 4 companies that are leveraging advances in technology to unlock this business opportunity, including OCO. So they leverage technology to provide loan, insurance, investment, and payment services to populations that were previously unserved or underserved. Let's talk about credit first. Tala is a startup that provides loans to people who were denied loans by financial institutions. They have no financial identity, they have no records. But Tala uses their mobile phone usage, their call patterns, their social media activity to understand them better and find out if they are creditworthy or not. They issue loans to people who were denied loans by other institutions, and despite that, their repayment rate is over 90%. And they started in Kenya. They are now growing to the Philippines and to India, becoming a global player. Let's move to investment. Some of you here on the room or online must have benefited from their investment in shares of tech companies or in cryptocurrencies. Well, this opportunity is not available to people who don't have bank accounts. Ijala is changing that. They offer people to invest in fractions of shares stored on the blockchain. Now you know what the blockchain is, even better. So people can obtain fractions of shares that are securely stored and also access cryptocurrencies. They can invest from as low as 7.5 euros. They're growing really fast, and they achieve their goals because half of the investments made on the platform are less than $10. Now let's move to the sexy industry that I work in, insurance. Isn't it absurd that here we can insure everything? We can insure our smartwatch, we can insure our pets, we can insure our train tickets. But people who are the most vulnerable have no access to financial safety nets. So what we do is we provide affordable crop insurance to farmers in emerging markets. They can access it with their phones, no internet required, no smartphone required. And once they registered and paid, we monitor the weather in the location of their farm. If we see, and we use satellite data, if we see that there was insufficient rain or excessive rain, farmers automatically receive an indemnity on their phone. They don't need to make a claim, they don't need to fill in a form, they don't need to move to the city. This way of verifying claims wouldn't have been possible a decade ago. But now with the improvements of Earth observation and with the fast-growing penetration of mobile payments, we've been able, from last year to this year, to multiply our revenue by 13. And finally, I cannot leave you without talking about Wave, after the huge investments they received just last week. Wave is a mobile wallet with very low transaction costs. Mobile payments have been skyrocketing for the past 10 years in most emerging markets. But now with the ubiquity of smartphones, companies like Wave are able to turn smartphone users into their agents. And with lower rates and a better user interface, they can fight with people like Western Union, MoneyGram, Orange Money, and beat them at their own game. They just raised $200 million for a seed round, and that's only 3 years after they launched, making it the first unicorn in Francophone Africa. The beauty is that these fintech innovations work in synergy. So let's think about Ismail Diakite again. He obtained an insurance from OCO, which lowered his risk of non-repayment for a loan. So then he went and asked for a loan, obtained a loan. He used it to buy seeds and fertilizers, invest in his activity, and he grew his revenue, which triggers more financial transactions with his mobile wallet. And it can lead to generating extra income that he can then potentially invest to diversify his source of income. This is not Ismail Diakite, but this is how you feel when you are finally financially included. This is a farmer that received a compensation from us last year because his field was flooded. We paid in total $70,000 to farmers in Mali last year. So to answer the questions that I started with, yes, there is a business opportunity in serving the underserved. And the opportunity has to be taken now, because this market is only going to grow bigger. I'll give you two figures to support this claim. The population growth in North America from today to 2050 is going to be 56 million additional people. In sub-Saharan Africa, is going to be 1 billion people who are all going to have the same needs, same basic needs. And today, it's only 1 out of 4 African people who can access internet. By 2025 alone, it's going to be 40%. These two combined is going to create a market that grows faster than anything you know. I talked a lot here about Africa. This is largely replicable to Latin America and Southeast Asia. So what's next? What can you do with this information? Well, if you're an investor, you need to get educated about this market. Learn about the players, learn about the trends, and learn about the new services. Not because it's good karma, also because it's good karma, but because you don't want to miss the next opportunity to invest early in the next company like Wave or OCO. You don't want to miss that chance. If you provide professional services, if you're an auditor, an accountant, a tax advisor, help founders. There are amazing entrepreneurs in this field, And we all need support to navigate the legislation, the tax implications, the regulation in this market. And by helping us, you're going to build an expertise that is going to make you more relevant in the coming years. If you know that, or if you're that, you can also contribute by buying an umbrella. We have a partnership with umbi.co, and for every umbrella that is bought on umbi.co, we provide insurance to a farming family in Mali. And we talked about necessity today. I think an umbrella in Luxembourg is something that could be useful. So that's it for me. You can connect with us on LinkedIn, on Facebook. You can snap this to subscribe to our newsletter. And I hope it was useful and that you're going to join us in providing the underserved with the power to build their own futures. Thank you.
Thank you, Simon, for sharing this insightful presentation and also to share with us what you do with your partners. And I would like to mention the link with the roundtable before, because I think you are an actor of the SDG 17, and concretely we see what does it mean now. Thank you. So we are in the end of the FinTech Summit for the 2021 edition. Please note that the exhibition area will stay open a little bit more, so don't hesitate to go and see all the coroner and companies that are just there. So you can spend some free time also to meet these companies. And I was honored to assist all of you in the FinTech journey, to have the chance to meet you, but also to connect with international speakers and participants thanks to the live streaming. I hope you had a great time discovering the underside and digital banking for financial inclusion. Have a great rest of the day, and I hope to see you again next year. Thank you so much. Bye.